What's good, money gang? It's your boy TBT. I'm about to give y'all a little bit of a trade breakdown, so y'all check it out. This is my trade breakdown from my stream, the one that I said I would post. So y'all check it out and let me know what y'all think. Someone told me they want me to do a chat, a Telegram chat, a public channel like a lot of these traders do. I'm thinking about it. I had thoughts about it before, but what I want to do is I want to have enough people that want to join. So I want to have like 100 or 500 people already that want to join. So I'm gonna wait until my subscribers get up. But if y'all really want me to do that, then y'all just let me know in the comments and all that. I'll be more than willing to do that and share some of my analysis and stuff like that. I guess for the week and just daily that I'm gonna start posting. I'll put those links in the chat and everything like that too. So yeah, y'all let me know. All right, y'all check out the trade. So here is where that trade was taking place. So let's kind of go through it over here on the charts. Essentially, I like to use a 15-minute 5 and a 3-minute for forex pairs when judging how I'm going to get into the trade, right? The 1 minute I use when I'm in the trade, but not really. I really just use the 3 because I'll talk about exit strategies where I use the 3 and the 5 minute to exit, right? So as I told you, we were in this area where I had laid up that I wanted a move to the downside. Now this downside area here is a fair value gap from the higher time frame. I think it's a 2 hour. Let's see what is it. It's a 1 hour buy side imbalance from way back in like 2021. So essentially it's a fair value gap, and that was the target. Somewhere in here, either midpoint, top of it, or bottom, or hopefully I was hoping that it was going to just keep rolling past it and go to the next one. But as we were getting into this trade, obviously you see I took how many trades? 1, 2, 3, 4. Now these are not representative of what was in my real account. This is just my demo that I show on YouTube. But I was in similar trades in my real account, just not as high. But obviously I still was into drawdown of 3,000. You see price just went up on me. And I really wasn't paying attention to the fair value gap that I had found. Now, as you see, you really can't see the fair value gap from here because all you can see really is the breaker. So let's kind of go over the breaker. High, low, higher high. The lowest down close candle, top to bottom, is the breaker. What did price do? It entered into it and rejected strongly. That's a huge bearish sign. But now we want to see what it's going to do in the area of the order block, right, and the fair value gap. So let's check that out, and let's do this, and let's do this so that we can see the charts. All right, so now we're in this area where we were at. You can still see the breaker tabulated here, correct? You can still see it. Let's move this out the way. Boom, high, low, higher high. Now this is from the 15 minutes, so it's not going to look the same. You could do the 5 minute if you wanted to do the lowest down close, something like that, but 15 minute I took the lowest down close, and that's essentially what that is. Now order block, 2 up close candles, right? Most recent up close candles, and we're using the entire wick, right? So I didn't tabulate it, but as you can see, it's just about the same size as far as the area. It's just about the same size as the breaker. So when these things start to come together and form a confluence where they're kind of working in unison, that is where you're starting to see some strength. Now you see price go up through the fair value gap where you saw where I was trading live, and I seen how it was bullish candle like this. I was like, yeah, I'm done, because I'm thinking it's gonna go and attack buy side liquidity, which is a legitimate thing. I mean, it could here buy side liquidity. I mean, it could have easily done that. So I was like, I'm done. I'm going to just observe. And then as I observed, I watched and saw that, okay, price is actually giving me another opportunity to enter, which is where you've seen, because this was my last entry where I was way too early. But here, and then boom, here is where I thought, okay, I might have a chance. Now, this is what I decided to do to prevent myself from going into extra drawdown. What I have decided is, from now on, first entry, it's got to be a small, meaningless lot size, 0.10, $1 per pip. I have to wait 15 minutes. What happens is, if I would have entered into a small lot and waited 3 candles, 15 minutes, 3 5-minute candles, I would have seen price isn't really adding up how I want. So I can exit that trade with a $5, $10, $15, $20 loss instead of a $2,000 loss. And then I can wait, right? Because then I need to be waiting 15 more minutes. Let price show me what's going on. Okay, now I'm waiting to see if price is going to, once it gets up here, if it's going to respect this area. So now the time's out the window. When I talk about that video for news, we're going to talk about how when there's 8:30 high impact news, you need to wait until after the 8:30 high impact news to understand what price wants to do. Because after that news, between 9 and 10 is usually when price is going to show you what it wants to do. And what did it do here? Rolling into 9, I didn't have to wait all the way until 9, but after that news, 8:40 is when you get the decisive candle. And then even this candle right here, because this candle is still an indecision. This candle, I'm thinking, I don't know, because it could easily continue up. There's a fair value gap right here. You never know. But then after this candle kind of trades through that fair value gap, for the most part, I'm thinking, okay, that's good. What I did now, instead of just entering a large 10 lot, I just went ahead and entered a 5 lot. And then, as you see, I entered a 5 lot here, and I entered another 5 lot here. Okay, so I'm starting to think that it's better to break down the trade. I can still get to the 10 lot that I want, but if I take my time, enter the 0.10 to kind of feel the market out, once I get that true signal and true rejection of the order block and fair value gap area, especially if the breaker is here too, rejection of the breaker, then I have means to get into one 5 lot, right? And now I want price to prove itself. Let me wait 5 more minutes at least. Let me wait 5 to 15 more minutes, right? 1 to 3 more 5-minute candles to see what price is gonna do. Okay, it gives me that. I can get in, and then from there, stop loss is where it's at. You still gotta take the necessary risk. You probably 10 to 15 pips, because you have this zone. You just put it above the zone probably after price has already swung through it, maybe above the recent high. And you gotta let it ride and see what's gonna happen. If you haven't taken a lot of drawdown already, then you will be good enough and in a good enough position to risk that 1 to 1,500 or 1,000 to $1,500, maybe even 2,000 if you're trying to risk that much, right? For me, entering into the 5, what I realized is if I can do a 5 lot, I should wait, give myself time instead of entering right here where I was in basically 10 lots and didn't really know 100% what was going to happen. I can wait. I can enter a 5 lot. Let me get to about 10 pips, right? And then once I get to about 10 pips in profit, put that 5 lot in stops to profit, or bring the stop a little bit shorter where it's like I'm not lose a lot. And then I can enter another 5, which at that point the risk transfers to the second one. So if I have a 5 lot where I'm risking 15 pips, $7,500 about, right? And then I say, okay, that one is gone about 10 pips or so. Let me go ahead and set that stop loss to profit. I'm not gonna lose anything on that. Now I'm setting this next 5 lot. Boom, I got 10 lots total, but really I only got 5 lots of risk. You see what I'm saying? So now I have waited, given myself enough time. Price has gone down a little bit. I've entered into another one. As long as I have the confirmation that I need, I have no problem scaling in, right? Because what's the difference between 60 pips with a 5 lot, right? Where you enter in at the beginning, and then the next 5 lot you waited 10 pips, right? You're gonna make a difference of $6,000 if you were to enter it all at once versus just $5,500. Only a $500 difference because it's 10 pips, right? So I'd rather allow myself to have that buffer where I've got one stops to profit, another is coming into the market, another trade where I've got the same. I just bring the risk from the first one to the second one, so now I'm not risking more, but I'm still building my positions. Then I get 10 more pips on that one. If I get a pullback, in a significant move back to the downside, there's another 5 lot entry right there. Now it's going to be a shorter exit for that last entry, correct? It will be, but then I've got 15 lots with only 5 lots of risk. So when I make that 60 pips that I made, right, I ended up making 5,000, got out here, if you go to a lower time frame, you will see that I didn't get out necessarily on that big candle. It was more so like a small. It was like right here. Yeah. So I in my actual FTMO account, I was like, yeah, let me go ahead and get out. So I got out around here, but in the demo, I was like, okay, let me grab that, and it was somewhere in here where I took like 50 or so pips from this entry up here, right? Let me actually just look at that. How far was that? So if I took the entry here, yeah, 50 pips is around here. So I probably took it around the top of this or whatever. So I still made about 5,500 or something like that dollars. So I'm like, if I can do that, build in the risk as I go instead of throwing the risk all in the beginning and not knowing what's going to happen, I will move the risk all the way through, and as I go through, I'm stops the profit, boom, add another one, stops the profit, boom, add another one, stops the profit, boom, add another one, until I'm at the comfortable 15 lots or so that I'm like, all right, I ain't gonna add no more because I don't know how many more pullbacks I'm gonna get, right? So, and I don't want to take too many extras because I really want to just take one extra on one pullback, right? Like the first two you want to probably have within this area because you kind of can tell what price is doing. You got one up there, boom, and as you can see, I took the next one on this 3 minute, boom. So that's good, boom. I take the next one here. I'm pretty satisfied with the risk because I know that price is going up in the DXY because it was, and then coming down here. So with that said, we're gonna end this video. I hope this was helpful to y'all. This is one of my trades where I made some mistakes, but I learned a lot of lessons. And the live streaming thing can really be a strength to you because if you can use it to your benefit as a tape reading, as a film session for yourself, forget about whoever's gonna watch. It's not really about them. It's really about me being able to say, all right, this is what I was thinking at that time, and now I can go back and look at this. Even if it's just taping yourself, screen recording, talking to the screen recording, and watching it back over yourself if you don't want to post it. But I mean, if you're on YouTube, you might as well post it. Just be transparent. Folks is trading, we trading out here, I'm getting better. So with that said, we'll catch y'all in the next video. Much love.